Good day, ladies and gentlemen. Welcome to my channel. Today is March 12th, 2023, and I'm going to discuss gold, silver, and senior gold miners GDX. Gold formed a decisive reversal on Friday, following the news that two US banks collapsed within 48 hours. I personally do not like event-driven rallies in gold, because in most of the cases, they don't provide a solid background for a sustainable and long-term rally. Although gold came back this week into my support zone once again, it didn't manage to test 1800 level and sharply reversed. So the key question is whether gold bottomed or not. In order to get some clues, let's look at relationships between gold to GDX and silver, as well as look at the COMEX data. Let's start looking at the price analysis between gold and GDX first. Even though gold declined nearly 2.5% intra-week, it managed not only to regain the entire decline, but also close positively on a week, adding nearly 1%. On the other hand, gold miners GDX lost over 6% on a weekly basis. Just 2 months ago, on January 6, gold price closed at $1,865. On the same day, GDX closed at $31.56, which constitutes nearly $4.50 price differential. GDX has to rise by 16% to catch up to the present gold price. But what we are witnessing, a continuous decoupling between gold and gold miners. Perhaps 3 to 5% disparity in price could have been justified, but 16% way too much. Such price anomaly should not last for too long. Either gold price has to come down or gold miners catch up. Now let's have a look at gold versus silver price. On a weekly basis, gold added almost 1%, while silver formed a fresh low, dipping under $20 level and lost 3.5% on a week. Since recent high, gold lost 5%. While silver lost 17%, more than 3 times as much. Normally, ratio stands 1 to 2. Again, we are witnessing a price anomaly between gold and silver price. Finally, let's have a look at the COMEX data. Over 255,000 gold April futures contracts yet to be closed out or rolled over before March end. Still too many futures contracts standing for the month of April 2023. Therefore, it is a bit early for gold to continue advancing unless a short squeeze happens in the gold market. To sum up, I have the following 2 scenarios on my mind. First scenario is that gold already bottomed at 1804 on the spot market. Over the next week, the metal is going to trade within $1875 range. All in all, it should be a neutral week for the gold. As gold is range trading and getting bids on any pullbacks, gold miners should start to catch up. Provided that gold price remains largely at present levels, by next Friday, GDX should add 8 to 10%. Second scenario is that Friday's rally was an event-driven price action, and that gold will head back under 1800 level once again, where it will ultimately bottom and start a new and long-term and sustainable bull run. All in all, gold price should either decline or stay at present levels, allowing for gold miners to catch up over the coming week. The least what I want is that gold keeps pushing higher while miners keep lagging behind. Quite complicated scenario is setting up in the market. The next week is key as we are quickly approaching a very important Fed meeting on March 22nd. This is it for today. Stay well and enjoy the weekend. Please note that this video is not an investment advice and prepared solely for educational purposes.